The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on the 16th day of September, halfway through the month and about to close the week. Very important how the weekly chart closes in all the different indices. Great program since 8 o'clock this morning. Got to thank John and then Larry and then Tom and Tommy and Daryl. Hope I can produce that kind of quality here for this hour, and then we've got program right through the day. So let's look at this. We've got the Dow down 90. At 18,121. The 18,000 level is going to be critical in the next few days. S&P 2134 down 12. Comp index down 21 at 5228. Now this is very important. The VIX index is at 16.52. It's only up 22 cents. If it starts to climb in the 70s by day's end, then options expiration. They did the bull side yesterday. They'll do the bear side today. Got to watch this real closely. At 16.52, if it slips down to 16.20, we could have another little pop-up and we'll see what happens. Key right now, the E-mini is down just 11 points at 21.27. That 9-period exponential moving average was resistance yesterday on that big spike intraday, but it's been resistance every day since it broke down on that was a Friday, right? Friday the 9th, a week ago. Now, what's really important about this, I'll show you in a moment, we've got a whole bunch of things going on here. What happens with this weekly chart? Any close, I'd say, below this 21, 31, 32 area, we're at 21, 27, it's going to suggest to me that we've got a sell signal in place. You've got the MACD finally crossing negative, and you've got the stochastic still at 84%. I'm going to have to do my homework there because I really like to get a down arrow with a sell mode. Usually that means a sell mode, but I might just put a down arrow like I have on the S&P to say, yes, we're in a sell signal, but technically the sell mode will be triggered if there's a decisive close today, again, underneath the 9-period exponential moving average. Here's the 120-minute chart, merely looking at a succession of an H going to a lowercase h going to a lowercase m. What does that mean? If you look at the my chart pattern, this is from introducing the Chapman Wave methodology, chart analysis in the stock market, available at TFNN. It's a CD book. And let's just go to chapter 17 right here. Chapter 17, the dreaded H. And that explains that you get this pattern that looks like a lowercase h, but it can keep failing. And then it can turn into a large, a stretched out sideways H that goes to a lowercase m formation. The rule of thumb with this is that eventually it breaks the left side low, and then you've got to see if you've triggered a brand new buy signal to buy mode, or whether it's just going to be another bounce and you're going to keep going lower. That's why it's so important. All right. So here we are. We're going to go to gold. Gold GC is trading at down forward at 13.13. I believe it will test the low that was made back on the 1st of September at 13.05. And if it breaks that, it's going down. My target has been for a while 12.84, the 200-period exponential moving average. That's where we'll do an analysis and see what's going on. The monthly chart, we've made a peak E after what, 7, 8 months? 1, 2, 3, 4, 5, 6, 7, 8 months of continuously rising prices, and you've got a peak A. And we'll see. It's gone too long for it to be what I call a surprise. This is a single leg A up syndrome. I'll get into that because we're going to see it in the 120-minute chart in a few minutes. Let's go on. We've got silver right now, SI, trading at 18.82, down 22 cents. Made it almost like a single leg A up. It happens to be a B, but it has that characteristic. I'll show you in a moment. I'll show you right now. This is the characteristic we're talking about. A very sharp move to the upside and then a pullback. You see this 10-minute E-mini chart, December E-mini. Actually, I've got the continuous contract, which is exactly the same price as the December contract. You see how it's gone straight up and it's pulled back? Any close below this little candle right there, 21.25, says, whoa, be careful. You're going to be testing the 21.23.75 low very quickly. So, okay, now let's get back to our story. Oh, this is the 10-minute chart. 21.29 is strong resistance. It's at 21.27. And as I say, a break below 21.23 will start us off on the down move again. That's just a cluster formation right there. Silver, as I said, let's go to the TLT. Nice bounce. A nice bounce. Save the day for the day, but it's not the week. The week is still very ugly. I've got a down mode, a sell mode in the weekly chart, sell mode in the daily chart. The monthly chart, of course, I have to wait for the end of the month, 2 weeks to go, so we're not going to talk about it, other than to say that it has tested the 9-period exponential moving average around about 133.90, and it's at 134.60 right now, just a little bit above. I think we now go a little bit sideways, and that's going to be the big test. Have we stopped the Japanization of our bond yields? Are the yields going to go much higher, or is this another one of those bounces that we've seen so often? Well, we'll know very soon. Let's go to crude oil. Crude oil has been making that H pattern. Look at that big H, and I drew this in the other day to say this is what I'm anticipating, that if it closes, it's already gone below, but if it closes underneath the low of 43.61, it's got 2 days in which to close above it, because if it doesn't, it's going all the way back to test the left side low of 42.44 on the 11th of August, and then the major low that was made at 39.18 on the 40.53 that was made on the 3rd of August. What am I leaving out here? Dollar. Most important dollar right now, having a nice rally. That's because gold's pulling back. It's the first time actually that gold's pulled back, and gold has actually broken away from the cluster formation that was forming right there, and it took off from the 200-period exponential moving average. I can just tell you this, that if the dollar goes above 96.25 for a leg C, this is actually would be a champ. If it does it right away within a day or so without pulling back and making a peak, that would be what we call a Chapman wave, overlapping wave. That's very powerful. This is not only will you go to a C, but you're going to go to a D, and it should be much higher up. And I can just tell you this, if the dollar goes to 96.80 by next Wednesday, this coming Wednesday, there's a real good chance that it is in play, and that it might have one spike to 100.52 to start leg D. And that's when we've got to be real careful as what's going to go on with is gold about then to turn around, or is the dollar now the major currency, even more a major currency? All right, I think we've covered a bunch of things. I said I'd be going to this pattern right here. This is the single leg A up. Remember, we did that at 18,358 in the Dow, going to the high of the 12th, then it pulls back and makes a new low at 17,992. Is this yet another one? This is a bearish formation. Why? Because in a bear market, you get these sudden up spikes, but they give them up very quickly. So we'll see where we close today. Day's young, but I got a feeling that there'll be a little nervousness going into the weekend. Now, this is a pattern that I showed my subscribers. This is why I don't call it Elliott Wave 5. Sometimes I'll talk about it being matching Elliott Wave 5. Chapman Wave 5 says that is 3, this is 4, and then if we break under 79.92, I'll reassess to see if I've moved the 3 over one more, or whether that's going to be 5, and then we get a nice rally intra-week, just because the Fed wants to keep pumping money to keep it going. I'll be back. Basil Chapman, Target Ignitions Hour.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new market-safe focused commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and I just want to finish this chart right here. B, C, D. All right, so Panera Bread. I was asked about Panera. Now, it's very interesting because Panera is trading at 200, down 3.96. I've been very negative. I had been very negative Panera back in 2013. And it's kind of been on my list for off my list for a long time. One of the reasons it's been off my list is that I just haven't actually gone there. I used to go there fairly. My wife and I, if we were in a rush and we were doing some shopping or whatever, we'd say, hey, let's just go and have a little, let's go to Panera. For some reason, I sometimes it's difficult to pinpoint a reason. I just haven't been there for quite a while, even when there's a choice, and it's right now we've got one right here in Newton Center. It's not one of the ones we like best of all. The one in Brookline we like, but there are others as well. Mostly they're kind of the same, but they're a little different. Each the venue has a different feel to it. Now, what's interesting about it is that I've been looking at these and saying, hey, this area is bound for a pullback at some point, and the pullback could turn out to be quite serious. But until it happens, I'm not going to do anything. Now, it was off my list. Not that it was off my list, just thinking about it, because there was an ad yesterday, and it said it had a food, and then it had a sandwich, a kind of, what do they call those things? I do it myself. When you toast both sides. Why am I forgetting the name? Anyway, it looked exactly like something I'm kind of familiar with. And I said to myself, hey, that looks like Panera, but it says Chipotle something other. But actually what it was is that they have a Chipotle grill, a chicken. So then when the ad came on and said Panera, I said, hey, I've got to look at the Panera chart. Well, I forgot about it. I just got an email. I got this is one of the few days ever I can recall getting a multitude of emails that directly relate not just to my work, to my opening call. On one hand, a couple of people congratulating me for the past month or so. Really some very nice calls. Other people saying, we're just new to it, and could you clarify some things? And one person saying that they're used to where it's written down somewhere that it's bought at such a date and sold at such a date. I tend not to do that because it's there. It's on my chart. I type it, bought it, whatever it is. Whenever you look at the chart, it actually says it. So that if you go to my Traders Corner, mostly it's just we're following everything sequentially, day by day. So I'll try my best to make that part of it clear. But one of the emails I haven't quite finished reading, it's quite long, had Whole Foods, and this person's traded it for some really nice gains over the past couple of years. So that means it's gone on the long side and the short side. So this is a Whole Foods market. It kind of fits into this scenario as well. So Panera is in a sell mode, a deep sell mode in my monthly. In my daily. It's confirmed this week's action confirms it very much in the weekly chart. It looks at 200. The all-time high was just recently at 224.15 with a little double top at 224.14. I love that. That's like in this case, in my monthly, it's called the Chapman Wave 2-bar reversal. And that says to me that Panera could come down for a while. It might have seen its top for quite a while, because I'm about at a peak F. There's a chance it's a peak F and not a new C. The MACD is turning down, still good. Stochastic still good at 86%, turning down. On balance, volume isn't there at all, and I don't like that. So I'm looking at this and I'm suggesting that there could be a few months worth of consolidation here in Panera. So I don't know what the question was because I didn't finish reading because my show came on. Look at the chart. Panera looks to me like it very well at 200 could go down to the 188 to 178 area. Test the low both of the 9th of February of 183. The 9th of February, which was 182.64, and it could go down to the lows of 179, 178. Let's call it back in January the 21st, over a period of a couple of weeks, because it really does look quite poor. Could have little bounces in between, but lower lows and lower highs. Whole Foods market, WFM. See, this is a little different. It's trying to find a base. It's already done a major sell. Remember, I said back in 2013, 14, I think Whole Foods, with the competition that's out there, Whole Foods it's a great company. But even then, the competition is so great that I think that Whole Foods is, in fact, making a hat-trick top. That means it's making a monthly, weekly, daily top of consequence that is price and time and will not see those highs for a very long time. Whole Foods right now is trading at 28.40, almost at the most recent lows. No, it's at lows. It's a multi-year lows. Double check that statement. Multi-year meaning the low of August of 2011 was 25.66. Yeah, very close. Okay, look, you got to be careful. Now, a couple of things that I wanted to do. Because it's such an important day today, if you no, my clock, sorry, my engineers asked me, is my clock off? No, I got that, I thought right on the button, but I didn't. I'll be more careful. Don't want to go over the commercial. So here this is what I'm looking at. If you don't mind, I usually do this on a Monday. I'm going to do it today. The XMI, which nobody ever looks at, but I used to trade. It used to be a wonderful vehicle for trading. This is the major market index, especially for options. Well, actually only for options. I didn't use it any other way. It's going to a sell mode in the monthly, in the weekly. And the daily has already been, it made a peak C1, C2 top, double top right there back in late July. And that was in the 1940 area. And it's trading right now at 1862. I think it's going to test 1850 next week, which is the 200-period exponential moving average. But the arch formation says that over a period of weeks, there's a real good chance that the 1830s to the 1820s will be a target. And this is the major market index. The reason why I like it, for the first time in years, the Dow has finally been able to match the major market index because it has all mediums, all sectors. The XMI, you see, before the major market, I wish I had it in front of me, but it has some tobacco, it has everything. It has financial, it has, I believe it has oil, maybe it's Exxon, I'm not sure. But what's really important, it had a really nice mix, so I always used it. But what's really interesting is that the Dow now, for me, this is perfect. I think it really represents the market because of the mix it has. It has financials. Maybe it has one too many. It should not have American Express, maybe. Or maybe it should have only Visa and not MasterCard and Visa. It should have just one of them. However, what's really important is that if you're looking at the Dow, the mix I love, it's got the Pfizer and Merck, so it's got the pharmaceuticals, got the banks, it's got Home Depot now, it's got Microsoft, it's got high-tech, IBM. No, IBM, I don't know if it's high-tech. Maybe it's getting back to being high-tech, but it's got the technology area. So I really like the mix very much. And as a result, I think it's very fair. So we use the Dow a lot for our longs and shorts. And as I say, we've been short, we added to the shorts and the big spike up yesterday to the Dow. And this XMI is, I can use the Dow even now more than the XMI because I think it represents the market much better than it ever has historically. I'll be back. Basil Chapman, Dow's down 99. I got a whole bunch of questions. I'll go through them as soon as I get back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So let me just, I don't know if I should show this. Yeah, all right, I'll do that. Doesn't really make any difference. This is, in fact, the Traders Corner. Actually, what I've done is made a copy of it. This is for Monday, so I can use it as a template. But so maybe I'll just go to the one that we actually used, which is right here. Okay, there it is. So this is today's newsletter, and it gives all the positions. Now, the question was, oops, I forgot about that. The question was, how do we know what you're just watching and what you have? Well, I underline positions that we have, and I underline what we are looking to buy. Otherwise, it's just there in backdrop because I always look at the Qs. I always look at the TLT. We don't often have it in position. I always look at the TVIX. I always use GE as a benchmark. Sometimes we have it. Most of the time, I just use it as an indicator. So let me not just put it aside. So underline, that's what it is. I've underlined it just to make sure that you understand what I'm doing. So I just wanted to do that. And let me show you why I'm talking about this. In the Dow, we went short via the one-to-one long position of the already short fund, which is the DOG. And we did that right there, right on the 12th. That's right there. The day after, the day peak D was confirmed, we already went short. It then popped up one more time to a peak E at 18,688, and we've stayed in that position. Now, what's interesting about it is that it's not a perfect position because it gets recalculated and all sorts of things. It's the best thing that you can do. If you don't want to actually short the Dow, shorting is actually usually the best because you take the risk of having to come up with money if you're wrong. This way you're losing money. It's just a very simple feat if you're wrong. And then we had the SDOW, which is 3 times short, and we took a break-even trade yesterday, 2 days ago, and yesterday we bought it back again, right almost at the bottom at 13 point, if I can remember right now, let me just tell you exactly what it was. 13.48, right? 13.48, and the low was 13.43. We got it within a few ticks of the low. And then what happened is, and now we're up, okay? But it's, you never know. These are 3 times long, so you can really, I make the stops really tight. That's just the way it is. Okay, then the next thing we have is, then I always put the QQQs. Yeah, the QQQs, and I just give you, I say, for instance, today, I say QQQ, very strong candle, helps the weekly, making 117 to 116.97, should be 116.90 to 116.70 key support. And what was the low today? The low so far is 116.71. So all of these things are very important to me. Then we got one that we bought yesterday. We bought it a few times now, CGI. We bought it yesterday at 838. 838. It went to 829 because I'm expecting leg D. And look at that, a fantastic move today. It went to 887. But now it's pulling back because the market has a lot of weight to the downside. So now we've been able to raise the stop, I believe, raise the stop to 848. If 869 is hit, raise the stop to 848. So we have a stop now, which is exactly what the low is today, but it first went up. So now that's the level of support. So we will make money no matter what happens unless it gaps down on Monday. Next thing we have is CTAS, Syntas. We went short just over 114. It's trading right now at 113.24. Hasn't done very much, but I think that the weekly chart is saying, hey, this is a fantastic company. The shorter term says to me that it should pull back, and if it closes under 110 anytime in the next 2 weeks, it should go to about 109, 108. And then I might be looking at it to rebuy if we're still short at that particular point. The DBC I always have on because it is a beautiful DB commodity index tracking. It has gas, crude, gold, zinc, soy, corn, sugar. Well, we took a little bit of a loss, 20 cents for just over 1% loss. And I tried to get into it. We were in at much nicer levels a long time ago, but I'm not happy. I think commodities need a little more time to pull back. I think looking out, it's going to be a great buy, but right now, just have it there because I don't want to forget about it. GE is my bellwether. You remember GE? I've been speaking about it for ages. And GE is, in fact, look, here it is. GE, there's that one-to-one. I didn't expect that there would be a one-to-one, but I said in the Chapman wave, this is an inverted stalk leg formation. Remember that you can have a sideways move. I call it the Chapman wave propeller shaft. That's how I really came up with this whole stalk leg formation a long time, talking about when I used to hand chart. And it can give you, it doesn't often happen, it goes 1-to-1, but it can go 1 to about 0.50. This has gone more than a 1-to-1 to the downside. How do I take it? I take it from the 32.95 high peak D in the Chapman wave and GE, because then the MACD and everything started to fail. And then the sideways move, so I take 31, I subtract that 1 almost 2 points, and I take it away from the high that was made at peak C at 31.57, that should take you to 29.57, and we went down to 29.42. So now we're in an area where GE is going to be really important for next week. Is it telling us that a chunk of the move down has been completed and that now we're going to have a bounce and the market will bounce and GE will try for these two moving averages between 30.20 and 30.44? And the monthly is still very strong? Or are we looking at GE telling us, don't be too carried away about the long side unless you've got specific stocks? Why? Because GE has broken key support levels, and it's just telling us that it's not acting very well at all. So that's like a bellwether for me. I always have GLD, even though when we do buy GLD, we usually buy it in the form of the IAU, which is a tenth of that, and GLD is a tenth of gold. So it's just a nice way of doing, inexpensive way of doing it. I'm not sure it's the best ETF to use, but we do. So gold is just, I'm waiting. I'm not doing anything with gold, but I wanted it there because we always use it. Because in that line, I put gold and I discussed the dollar as well. For instance, I said GLD so-so as the dollar waffles. Well, the dollar decided it had finished waffling. It put a little syrup or whatever it is on the waffle, and look at that. That's a nice move up. So this is telling me that. Now, I usually follow that if the dollar is strong, it historically, the way I look at the market, I'm always looking to say, hey, is the market going to follow? Because it often follows. So there's a relationship there that I might put together, and that's the reason why I have it. The IBB, we had a huge gain at like 111 and then added another 20 or so points to that. And now we've just not been doing very much at all. Just I have it there because it's very important, and I think it's good. I got an email about someone who's been trading options and done very nicely. What to do with the option? I said, I think I would get out the call option. I'm sorry, the put option, because it looked to me like IBB is holding really well and that it's not making the second arch formation. This could be a tell, and I might have to be covering some shorts because if the IBB gains strength, it's going to help the NDX, and the NDX has had a spectacular move with the XLK. I featured that today for subscribers. That is the financials. Now, this is going to be really interesting. What is this? Is this a failure pattern? I'll be sending out another email over the weekend, as I do always with my Monday calls, start getting them ready. As I'm done with them, I send them off to my site. So this is XLK, the S&P Select Technical Spider Fund is going to be very important. I'll go through some of these in a moment. I'll continue looking at them because I have been asked enough about it, and I think today is a good day to do it. So we're talking about my Traders Corner in my opening call. This is the first paragraph, just sums up everything, and the rest gives you all the positions or what we are watching. I'll be back. Basil Chapman, Dow's down 77.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi folks, bringing a bunch of letters, but I said that I'd go through my Traders Corner again just to show you what we do and what I'm talking about. The next one on the list is number 11, right? Let me show it again. Right here, number 11, underlined. I've got buy small at 11.82 with a 15-cent very tight stop, all right? So that's MWA. MWA is, in fact, Miller Water Products. And we missed it. It went 11.88. It closed yesterday at 11.77. I wanted to buy 11. Wait a minute. It closed at 11.93. I wanted to buy at 11.82, and it went to 11.88. Now it's traveling up at 12.02. We've had this. We've made some nice money on it. I think it's a nice-looking chart, Miller Water Products, and we've missed it. So it's acting quite well. Next one on the list is Orly. So we had that as a short back at 281. I can't remember. I think it was a break-even trade. Yeah, it was exactly a break-even trade. And now it's at 273. So sometimes you get out a little early, and then what can I say? I did the analysis correctly, but we didn't hold the trade long enough. So it's now up 7. It would have been up 8 points. Big, what can I say? Next one is the SOXS, which is 3 times short the SMHs. I was going to buy it again today. We lost 20 cents yesterday on an $18 stock. I mean, what can you do? It didn't work out. I'm not even sure why. And today Intel comes out with all this news about looking forward, and all of a sudden, the SMHs are down 14 cents. It had a high today of 67.45. Now, I'm not sure what to call this, because if it's a brand new leg, hey, we're going even higher. But that monthly chart is still, a weekly chart is still very good. The monthly chart is outstanding. So that's almost like the XLK. So, and even now it's giving a nice little pop because the SMHs did pull back. But what can I say? We did have a nice trade. We made money on it a couple of times now. The SPY, I always have the SPY. We hardly ever do anything, but every once in a while, I'll buy the SPLX or SPLS. I'll buy the triple short or triple long of the S&P. But right now, look at it. This is a very weak chart. The weekly chart is not good. So a SPY looks to me like it needs more work on the downside before it can form a base. Telephone we've had since December at 34.19. It hit 34.19. It's trading at 39.96. It hit 43.89, but it's a dividend stock. We've got dividends already each quarter. So I'm loath to get rid of it because I think it still has a D to go in the monthly, but I might not hang around all that much longer if it's going to be showing any more weakness. So it's got a very nice gain plus the dividend, and that's since December. We've got TL. I always do TLT, and I do an analysis of the TLT. I always do the TVIX or whatever I think on the sentiment side. In this case, it's 2 times long the VIX index. We have no trades right now. The next one is Ulta. Ulta Salon Cosmetics. We short in the newsletter at 270.11. It's trading at 234. That's a 46-point decline. That's a big decline. I think it's a real problem. I did Elliott Wave and all sorts of things. Chapman Wave, Elliott Wave on the weekly, and the monthly has got a peak E. I think this is a pretty serious top. So that's that. XLF, we don't have anything in the XLF. We've tried it a number of times. I'm just going to wait on the financials. I just think they need more time. So that's it. I mean, there are 19, sometimes there are 20. Maybe there is I'm missing, no, 19 today. Sometimes there are 20, 21 bullet points. But it's the underlying ones that are the trades or the potential trades, all right? And I'll try to make everything as clear as I can. I like to make it as clear as possible. But normally I type on the chart, like here, Ulta, look, Ulta, type right on the chart. We did it once. We lost $2.40, 0.87%, less than 1%. Next time we got it right there on the 26th of August. It's always typed on the chart what we do. Okay, good. All right, so I wanted to do that. All those questions coming in, even more questions coming in. But actually, I do thank you for those because I always try to make my newsletter just as clear and clean as possible. And so let's go on. So the question is RTH. What about the RTH? And the RTH is the retail market vectors retail ETF. I'm watching this closely because the weekly chart has gone to a sell mode. The daily is already in a sell mode, obviously, otherwise the weekly couldn't be in. The monthly is still holding quite well. Now, I'm going to have a look at this over the weekend. I'm going to look at the different stocks and then make some kind of a decision. But the XRT, which is the same, not the same thing. People think it's the same thing, but it's the Spider S&P Retail. It has Groupon, Gap, Outer something or other. It has names I hardly. Francesco, Clothes, Burlington, DSW, that's shoes, SHLD, Sears Holdings. Horrible stock. Anyway, it has a different mix. I don't like it at all. I like the RTH. It has everything I would like in it. I don't like the XRT, but it's in a sell mode in both time frames as well. And the monthly chart hasn't broken the key. It's at 43.83. It needs to break decisively into the 47s. Once it gets to the 47s, it's a different thing altogether. Okay, got all that done. Now I wanted, oh, that's right. Next question was, Bob wants to know Deutsche Bank, DB. Oh, Deutsche Bank. Look at that gap. So it makes a peak. And what do we look for in the Chapman Wave methodology? We look for Ds. So, and that's where you got to be careful. So you got peak A right there, peak B right in the daily, peak C, and boom, D. And what do you expect at D? Other things can happen. That's where you don't have to, but that's where you can get the longest and deepest correction. And it goes from 15.33 down 2 points from there. It's down 9.3 just on the day at 13.39. Don't touch any of these banks that have problems. There's no bargain if you're going to see an overnight move that just wipes you out. I don't even want to look at. Oh, Sarah. Oh no, and then just quickly checking. Yeah, that's my statement. I just don't. If you can't play with the best of the best, the J.P. Morgans, which had done very nicely, and the Bank of America, which are also suffering right now, shorter term. Look at the Bank of America is holding very well, but it's not doing great. So just if these can't do well, and they've already done everything they can to be in compliance. I remember I told you once I played tennis when I was out there in the Berkshires with Tim from the Federal Reserve Bank. No, not Tim Guyton. It's a younger Tim, much younger Tim. I can tell you that from having to run so hard. And Tim, he's a lawyer, and he does compliance. And I discussed compliance. And he said they're more in compliance than ever before, but I got to check I got to cross every T and every dot. I got to check everything. And it's not easy because they're always trying to do something a little different. Let's go on. So now the VIX index. The VIX index is very important. I always look what I did today in my newsletter. It's funny that I'm mentioning the VIX right now. Look at this. I said, normally it's a very comprehensive look at the market, just an overview and market today. What I'm expecting, here I say, I've got my 5 quadrants here. My number one's the 120-minute Dow chart, the 120-minute VIX index, the short-term Richard Arms short-term trading index, and then we've got the bar chart of the Dow and the S&P. And I said, overview on market today. Keep it as simple as possible. It is all about the boom, VIX volatility index in big red. And that's what I said. And I said, if the Dow is down sharply, you've got to be very careful. Okay, so that's my newsletter. It's got a lot of information every day. I'll be back. The Dow is down 80 points. S&P is down 10. Basil Chapman, Titan Ignitions Hour. Be right back for the final set.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Chart right here. This is called the New York Stock Exchange Transits 8:15 to 9:31, expecting bottom 917, bouncing to 923-926. This is why am I forgetting who it was yesterday? Was it Shane? I think it was Shane. Yes, I'm talking about these charts. So Larry has a terrific show, and he has wonderful guests. He does terrific work, and besides that, he knows exactly what to ask his guests. So Shane was showing all these different charts. I look at these charts, and I just immediately start counting the waves. So look, New York Stock Exchange from August 25th, I go peak A, B, C, D, E. Bam, it comes down. On the 17th, he's got a projection of moves to the upside, and it goes peak A, B, C, D, E. Bam, to the downside on the 23rd. I'm expecting that there's going to be more. It's really difficult in this market being short unless you pick it exactly right. We were really lucky to get almost the exact top in the Dow. We got almost the exact top in the Ultra. So if you manage to get that, or the exact bottom, if you're in an inverse position, it really helps you because you've got a little room for these crazy spikes to the upside as you make lower lows and lower downs. I'm expecting by maybe Tuesday of next week, we could make some kind of a bottom in anticipation of the Fed talk next Thursday. And they might just do this. They might bump up the rates and at the same time ameliorate it by talking, that's it, we're done, whatever it is, so that the market perceives it however it wants to. Hey, let's go to Ben in Tallahassee. Ben, how are you?
Hey, Basil, real quick. So I'm following your newsletter, and I saw right around this time, right at noon today, if the market was at this level, it would follow your trend profile. So I guess you're sticking with that. Is that correct?
I am sticking with it, and the profile implies that there should be lower lows, that we should take out the 17,990 level by Monday-ish. And okay, that's where I'm expecting that perhaps I've got to start being ready for some kind of a turn. That's the reason why you know that I've got longs and shorts,
right,
but I'm biased a little bit more to the short side at this particular stage. But I think that the Fed is going to try as much as they can to prop this market up regardless. That's their job. I mean, that's not the official job, but in the real fine print. Yep.
You would, if we closed at this level or lower today, you would keep your shorts over the weekend.
I feel strongly that that's the way I have to do it. We have got pretty tight stops, but I'm going to do that. I'm not sure what it could be over the weekend that it has the market gap up 150 right. points. It could do it. I just don't see it. That's all. Maybe it could pop, but I just don't think it's that much. And if it stays around here, we at least got some comfort factor, and that's all I really like. Is I want to know the odds are more on our side, and that's it.
Great. Basil, thanks a lot. Have a great weekend.
Thank you very much. I appreciate your call, Ben. And thank you for being a subscriber. So, folks, let's just do this again. XOP, I'll do this real quickly. Yeah, XOP has made that A pattern straight up, straight down. It looks like the weekly chart is in a consolidation at 36. I wouldn't be long. I wouldn't be short. I think it's going to go a little lower. I'd rather be watching this right now. This is the oil and gas exploration. All right, quickly. As we go into the weekend, I will start sending charts out first thing Saturday morning as soon as I can get it done before I go to tennis. And over the weekend, I will be sending. I won't do as many charts. I'm going to do a lot of writing because I'm also going to explain some things that I'm looking at. I want to get us ready for any surprises, up or down, here for the subscribers. VIX at 1630, you see it has pulled back. Market responded a little bit by rallying about 20, 30 points. To me, that's not quite enough yet. But the VIX is not rallying up. It's pulling back, and that's giving some comfort. So maybe we do close, somewhere around between minus 60 and a minus 90 on the down. I'm not sure yet because I'd usually wait until after 12 o'clock and I do my assessment. But in the meantime, this is a weak market. Lower lows and lower highs, a bounce next week sometime in anticipation of the Fed, and then what do we do? Hey, folks, have a wonderful weekend. Check out my opening call. You want to try it now. If you need to be able to get in and get some questions, you can call it TFNN. But I do recommend that this is a great time. If you really want to study it, get to know what I'm looking at, this is a perfect time. Hey, well, have a wonderful weekend. See you back on Monday.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.